we are now live.
I think we're live, yeah.
Yay.
Oh, you know what?
Hi, YouTube.
I don't even know how can we see.
Instagram, we're live.
Hello, Instagram. That's an easier thing. So this is the first time we're doing this live on Instagram and YouTube. So we can see that someone's on, but I don't know if we can see their questions. Hopefully this button does that.
May streaming ba?
No. Okay. We'll be on.
Hey, Aaron. Hi, David. Hi, Grace. Oh my God, we're seeing you. Woohoo.
Okay. There we go. We'll look at the chat from our phone. So if we're looking down, it's because we're looking at our phone.
Hey guys, we're here to answer your burning questions on topics such as raising millions of dollars, how to attract investors, and how to scale up your real estate investing business.
Yeah, so a lot of people have been asking us a lot of these questions. So we do, for those of you who don't know who we are, what we do, so we buy large-scale multifamily apartments, things that are like 70, 80, $100 million and up multi-family properties. And a lot of times these properties, we're raising millions of dollars. So far, we raised like $130 something million in the last 5 years in order to buy these properties with our investors. So getting into large-scale multifamily doesn't require you to have all the money or be part of some sort of like large company. You can do
or
this.
Like get inheritance from your family or anything like that, right? You can always make up in leverage what you're missing, right?
Yeah, so the name of the game is leverage. Leverage in physics is basically the ability to have a small input that gives you a large output. And when you do that with real estate, the two components that you typically look for as far as leverage goes is number one is your lender, who will be your biggest silent partner. Typically in the past, pre-COVID, they typically loan up to 80% of the purchase price. So if something was hypothetically $100 million, they would have lent $80 million, which means that you're still facing with $20 million that you have to figure out how you're going to fill that gap. Some people may say, I have $20 million in the bank, I'll just wire that. Or some people may say like, hey, I don't have $20 million in the bank and I'm going to figure out how to get other people who love real estate, who understands the risk and rewards of real estate, and they're going to come in together. And now those people, they also don't have $20 million. And so they need to have people also that come in together, pool money together, and then we all can go after bigger projects. Who here, raise your hands. Let me know in the chat and all the platforms, like who here have had an interest in real estate but don't have like millions of dollars, but like, hey man, I really like to invest in real estate in some form. Like, let us know, wave hearts, likes.
Yes, we see you.
You see that? Okay. So basically, like, we all have, right? Real estate is one of the most tried and true industries because we've seen the rise and fall of so many different business types. But the one thing that will stay forever as long as they're a human being on this planet is shelter, housing. So people are here, they need a place to live. So the taxi can be outsourced, can be obsolete based on Uber. Blockbuster can go away based on Netflix. All these different industries comes and go. And the reason that real estate has stood the test of time is because it serves a fundamental need. So we are here again, guys, because there have been so many questions that Nan and I have helped answer behind closed doors. And we felt like there are so many people who can benefit from getting into the real estate game, can help them find a completely new passion that can help them escape from whatever jobs or business that they may be frustrated in. But the biggest thing one of the biggest barrier to them getting that success is the ability to have investors, to attract investors, even if you're brand new.
Yeah, so like when we first started, we started off with in single family housing, like flipping renovation in Los Angeles, and we've been taught like, hey, you find a deal and you find the money. That's all you have to do. Find a deal, find the money. Well, you know what? It's actually easier to find deals sometimes than to find the money, because like
for some people who don't know,
right? How. Like for some people who don't know how, like on our first single family flip, like we were so happy that we finally, after 16 months of trying, that we find that single family house. Well, the problem was we don't have the money to bridge that gap up to purchase that price that home. So we were kind of in a panic mode because we knew like in theory that this is what we have to do. In real estate, you just have to find deals and find the money. But we weren't prepared at all.
So like in theory, finding the deal is easier because finding the deal is like, hey, underwriting, a lot of stuff is behind the scene. You don't really have to talk to people. The skill sets to underwrite a deal, to talk to brokers is stuff that you can pretty much translate from whatever business or a job that you have right now, right? You're dealing with people all the time. Like, hey, someone who loves Excel or spreadsheet, it's their jam. So it's normal. It's like translatable. When we first learned that, hey, we need to find deals, find the money, we completely ignored the find the money part because it was like
we were like, maybe when we have a deal,
yeah,
we'll figure
it out.
It'll fund itself.
Because it's like one of those things where like, when people like when you have to exercise, like I know I should be exercising more, but I just like I really don't want to do it, so I just kind of like push it off. That's the same thing with raising money or finding deals. Spending time driving properties, touring, talking to brokers, it was easier for us to do versus actually dealing with this thing because at that time we didn't know how to speak to people, and so it would have been very it was very it was really stressful, and like every time we thought about because
I mean, like we introverts who don't like to speak to people,
yeah,
it was really nerve-wracking for us
at the
because
beginning, yeah.
we didn't understand the psychology of raising money.
Yeah.
We thought that, hey, we're actually asking people for money, but actually in actuality we're actually giving them opportunities to make a lot of money without putting in additional effort, without sacrificing their time.
So can you guys give us some context? Who here have tried raising money before? Let us know in the chat, in the message us.
Hey. Who here or who wants to raise
money?
Who wants
to raise money?
Right?
I'm sure you guys all want to raise money, right? Okay.
Because you know that at the end of the day, if you can raise a limited amount of money, your life will forever change. And in the last 5 years, that's what we've been.
I can see the comments now. Oh, awesome.
That's what our life in the last 5 years has been doing, right? Like crafting and also learning how to put it into a system of how to raise capital. And our life has forever changed, right? We're no longer the people who actually begging for money. We're the people who people are like, hey, when I have extra cash, I want to turn my profit into, making money, creating wealth. They come to us.
So the thing also, guys, like we come from the real estate world, multifamily specifically, but you can translate the skill set that it takes to attract investors, raise capital to any endeavor. The number one business skill set that you need to really have is ability to have funding. So people can't grow their business. People can be awesome at operations. People can be good at marketing. But if you don't know how to have more funding, you can't grow. And so if you know how to grow your funding, what Nan said, like you can leverage it, you can use leverage to replace the things that you're lacking. If you have something that you're lacking in ability, you can use leverage to solve for that. Okay. So
now that you guys know that we love real estate
and raising money, investors, attracting investors,
and that this is our jam, right? Like we are apartment operators. We're general partners in 9 large multifamily complex, and we bring many like different skill set to our team, not just raising capital, but asset management and sourcing the deal and all this stuff. But what we have fun the most is actually talking to investor, and helping them achieve their goals. Like that's our fun, because like making money for ourselves only is not that fun when you can actually have, make more impact on other people's life. I think that's what we look forward to do every single day.
Okay, so here's the kind of like the rundown how we anticipate doing this. This video is live on different platforms, but on YouTube we're gonna keep it forever and ever
until
and then we're gonna come back and laugh at ourselves and be like, maybe I need to delete it. Okay.
Yes.
But anyway, so the purpose here is this is gonna be a new series that we're gonna drop, and going forward, if you have questions or specific talk, and maybe in the future we'll actually bring someone on if we know like how to do that technologically. Like I'm not exactly sure how to do this. So anyway, let's talk about some of the questions that we've gotten.
So we got a lot of questions. People have a lot of questions, and we love them.
So we have 45 minutes or so. We're going to try to go through as many questions as we can. And then like the next time we come on, we'll have more questions. And once we learn the technology of having like a interaction on this, we'll bring people on. I just don't know exactly how to do that right now.
Yes.
Okay.
So
Let's start with the first question. So, I got this question from a person who's raising money, and this is really interesting. He's raising a fund for art, and I don't know a great friend of ours. So if I say this wrong, I'm sorry, I'm butchering this. But basically, instead of real estate, he's raising funds to buy like Picassos and stuff, which is really interesting because it's another form of alternative investments. And his question to us was, hey, how do I deal with the IRAs? Because a lot of like self-directed retirement accounts do not allow their custodians do not allow investors to invest in things outside of like mutual funds or the stock market. And so that has happened to us a lot because we are in the multifamily space, which is considered an alternative investment. But what happens is like, they'll just have to transfer to a custodian that actually accepts alternative investments through self-directed, that their investors can invest these in alternatives. So most of the find things like he's using a company, I don't know where it's from, but basically Lawrence, we give you a link.
But you can drop
it here. But you can drop it here right now. But basically, we'll give you guys a link later again. So we put in the board announcing like, hey, we're gonna do this, and then like
just because we anticipate there's gonna be a lot of questions.
We want to have some orderly. Basically, okay. So the IRA, all you have to do if your investor has money in like Schwab or some of the major traditional brands, and they're like, I can't invest in your thing. I love art, and I totally believe like you see these deals, right? Like it goes up in value, like. It's amazing how high the appreciation can go. So all you have to do is like Mr. and Mrs. Investor, all you have to do is transfer the custodian, change the custodian to one that allows you to invest in that alternative asset. There's many different companies out there. I don't want to say any specific one because I only work with a handful of them that's in the multifamily space, but there's tons of them, reputable one, because keep in mind that until you put your money out in the world to invest, you're leaving your money in with them, right? So you need to find a reliable source that's not going to be like, shady. So
what I want to add to that is that, again, it goes back to when you learn the skill set of raising capital, the opportunity is limitless, right? It's not just real estate. It's not just apartment. It's not just single family flipping. You can do art. You can do storage. You can do so many other things. And like us, like over the last 5 years, we get invited into so many different asset class, even raising money for business, for like medical center, all these things. It's just like so for us, it's like learning the skill set. You have endless opportunities.
Yeah, and so because what you do is like you uncap the amount of money that you can have access to. Right now, there's trillions of dollars on the sideline waiting to be placed. Money is like water. It flows in one direction. It flows towards yield. And so as long as you can provide assurance that your investment is something that will be somewhat secure, it may not be risk-free, but it's secure, and also that there's tangible returns. Some track record would be awesome, but all those things we can work on will be very helpful for you to attract the type of investor that you want. So investment is a two-way street, guys. So a lot of time when new investor comes into the game, they think like the investors are picking you, right? But you also have the choice. You also get to decide who you want to have in your investment. So don't forget, like,
so for those of you guys who are our passive investor, we love you and we chose you too. Vice versa, that you have chosen us.
Yeah. Okay. So that was a question.
So here's the thing. Another thing that we want to leave it on that question is we want raising capital is like breaking the floor and raising the floor,
breaking the ceiling.
Yep. Because you get to write your own check, basically, right? Like when you have that skill set, when you have that ability, when you want a raise, you just go do,
So, like a quick math, I know not everyone's in multifamily, but we have that experience, so we can tell you. Okay.
So actually, I think in many businesses, similar math.
Probably similar math. So basically, like, when you do multifamily correctly as a general partner, and I'm not going to
have so many multifamily peeps here,
but we don't want to quote like specifics, right? But in general, people can make millions of dollars per deal. I'll just leave it at that. And so just imagine that's why leverage is so important. Okay.
Okay. Wait, what were we leverage? What you were saying?
So sorry, a lot
See,
of screens.
as you can see, this is live, unscripted.
So basically, what I'm saying is like, once you're able to open that floodgate, because there's trillions of dollars out there, your ability to pick and choose the right deal becomes significantly better. You don't have to settle for bad deals. You don't have to settle for the type of deals that you don't want. You get to partner with whomever you want, because you are now a valuable part of that team.
And here's the thing: as lead general partners, we always look for partners who can, bring in bring capitals, bring other asset added value to our team. So you'll be desirable person who, like, people like
You're
us.
gonna be a magnet.
Yeah, like, trying to go after and just sought out and just want to partner, every single deal together. Like,
Okay.
next question. Woo.
Next question. We'll come back to the IRA one real quick.
Okay. Wow. I'm like, wait, we have so many questions. We haven't started.
Yeah, sorry.
Okay. So a question here is,
we will get to that too.
what tools are in your tech stack that help you efficiently raise for and navigate the life of investment property? So many tools from our syndicators and fund operators out there. Love your question.
Okay, so this question is a really good one. The first thing is, we'll start from the beginning. When we first started, we literally had Excel and we had a Gmail account. Like, literally, that was it. We didn't even have a website and none of that. The reason is, like, the core business of raising money is, even though we now learn how to do one-to-many, it starts out with a one-to-one relationship. So you don't need to have a whole bunch of technology to really have that happen. You have to become the type of person that other people will say yes to when you have an investment opportunity. And that doesn't require tons of technology. So at the beginning, start with a free CRM, customer relation management, something I don't even know what it stands for. CRM. MailChimp, free one. You can use that. Google Sheet, Gmail, things like that. Like Google. Okay, very, very basic, where you don't have to spend any money. Get a Gmail account for specifically your investment. Get a MailChimp account that's free. Connect it, and have what did I say? A Google Sheet, which is also free. These three things you can use. So the first one is obviously like the MailChimp. You're going to use that to communicate with your investors. You can keep track. You can write all the information about them in there. Then once you become more familiar, you have more team members, you can add on stuff.
And the reason why we say that is because a lot of people get stuck with tech. And like, I'm one of them. I'm not tech savvy at all. So when you say technology stuff, I'm like, I don't know what to do. I don't know which platform to choose. I don't know this and that. And it makes me froze, right? So I don't do anything. And that's why for us, it's like, just get into the action and start doing it. And that repeatedly through time, you become better at it. And then once you get comfortable with one thing, you start adding on to the next thing. But don't like make tech stop you from doing anything.
Yeah. So don't get overwhelmed. The key is, don't let technology overwhelm you so that you stay in place and you don't move forward. So if anything, just take those three things, and then like from there you can figure out the rest going forward once you have a team member. And what Nan said is basically, once you have mastery over those specific skill set, that becomes second nature to you, that you don't have to cognitively think about, then you move on to the next thing. Yeah, you can have really advanced things, but you really don't need it.
Like for the longest time, like when we started, we didn't have a website.
Yeah,
we didn't have like XYZ. But we just have like us.
Yeah.
But not saying it's like the best thing, but we're just saying like, hey,
don't get overwhelmed.
You can just get started today, like right now.
Yeah, right now. Okay. A question here.
Oh, so many questions. Let's go from the top.
So, what do you guys do when your investor asks you to speak with their major broker investment advisor?
Okay. So that's a great question, Ron. And for us, like, honestly, we have so many investors, right? So we can pick and choose who we want to, bring onto the deal. So if
the investor is going to make this complicated, unless they're putting like millions of dollars, and you're certain they're going to do that, I would like, hey, I can talk to them, but like, I'm not going to convince them. This is not a convincing game. So they want to invest or they don't want to invest.
And they shouldn't like think about it. It's their money, but they're giving the broker like
the right to do something.
So you can already see that they're not really raving fan
Yeah,
of
and
yours,
you're
or
and
they're not
then
your ideal investor because they're like, I'm not convinced. I need you to go convince my
yeah, you.
broker.
This is not about convincing. And if they need someone else to decide how their money is gonna grow, then maybe that's not the right person to talk to.
And it already shows that they're not really interested in investing with you because, like, like if you want to invest in something,
You're gonna do it.
it's your money.
You're gonna
And this is a great investment, and this will help, like, build your wealth. You will do it regardless of the CPA
Yeah,
say
you don't
what,
care.
the broker say what. You're not gonna say, oh, just talk to my broker.
No, because it's almost like it's like a built-in excuse. Because if you spend time, you're gonna spend time and energy talking
It's
to
like they didn't
this
know how to say
broker,
no to you.
and then all of a sudden they're gonna say, "Yeah, he said it's not a blah 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 blah," and you're like, "Oh my gosh, I spent an hour and a half talking to this person."
And that's why it's so important to be able to have a system where you can attract investor, have a communication like flow that they're already gonna say yes to you before they even know what what is your investment
That's the
opportunity,
best way. And
right?
also know, like, at the beginning, ask them, like, hey, who's the decision maker? If there's like multiple people that has to be like they're like they have all these walls in between, then say like, yeah, do we want, it's not like we're discriminating, but we want a nice life, and we're not going to spend hours and hours talking to someone knowing that we'll still talk to you, but we may not give all that time because you only have a limited amount of time. You also have a whole bunch of other investors you have to serve.
And that's why it's so important to set up the system ahead of time where when you have investment opportunities, instead of having to jump on a call with their broker, you actually get them to
get their buy-in ahead of time.
Yeah, get them to subscribe to your like investment opportunities. So just again, you have to set up a system, and develop this craft and learn how to shorten that process.
Okay, so I think it's Kai. What are some of your recommendations?
Can you read it louder?
That's not loud enough.
Like clearly.
Hey guys, what are some of your recommendations for new investors to begin raising capital? Okay.
Well, thank you for tuning into this channel live. That's the first start.
Okay. So basically, identify, okay, how much money are you raising? Identify who are your ideal investors that you want to attract, and then go find where they are, and then like start creating that credibility so that they understand like where you're coming from. When we first started, we were flipping houses. We didn't do multifamily, and so we were really, really bad at raising capital when we were doing single family flips.
Trust us, when we said bad, it was bad.
We literally had 3 investors there. It was not good. Go to where they're at.
So okay, my take on this is like the recommendation for new investor. First of all, you have to identify what will get you to be on a team, because like your dollar amount that you have to raise for your team, it plays the role of how you're going to plan out this whole thing. So once you identify the team, you're going to talk to them. Hey, I'm planning to come to you and bring you value, bring something like capital raising. Ask them how much are they.
Can I say something real quick about capital raising?
And a disclaimer.
This is a general disclaimer. Basically, capital raising, real estate investment, all that stuff is a highly regulated business. So we're going to repeat this a lot because we want to make sure you guys understand this. You cannot come into like a multifamily apartment syndication, for instance, and only raise capital. That is illegal. You cannot do that. So you have to raise capital and also bring in other attributes. You can, hey, I can help with emails. I can help with
investor connection and everything,
analyzing deals, tour the property, whatever. You can do a whole bunch of other stuff, but you cannot just raise money. We just want to make sure you guys understand.
So to get back to that question, is that identify like a lot of people come to me and say, hey, I can do XYZ, and I'm just like tell me the actual number that you can do. Just don't tell me I think I can raise money, right? Because I'm not looking just for capital raiser. I'm looking more than just raising the money.
So at the beginning, as he's asking the question, how to start, I think the easiest part is like, what are the type of investment that you're looking to do? You have a pretty good knowledge and understanding of that. So if someone asks you questions about it, you really can answer. And also maybe go to, like, when we first started, we just went to the meetups that pertains to that. For instance, we went to real estate meetups at the beginning because that's the easiest way to build in that comfort to talk to strangers about what you do. Outside of this world, people are not used to talking about money. Like, you don't just go to a stranger and say like, hey, are you an accredited investor? Right? But when you go to a real estate meetup, You're
I think
talking about similar
and
topics.
I think like you just have to practice, like getting to the room, like Pom said, of people who are enthusiastic about real estate, and just practice by saying, like, by telling them what you want to accomplish, and then like kind of have a plan, and get educated and develop the skill set.
And also really learn what they're looking for. Ask them like, hey, what type of investments are you interested in? For instance, if someone like, I love storages, I love to do stocks or something, like don't try to convince anyone to invest in something else. That's never going to happen. It'll be horribly painful experience.
Oh, I think another one that we've kind of forgot, like, which is the most important one. You have to kind of identify your audience. Who is your audience? Like, like, who are you? Who do you want to talk to? Who can you help solve the issue? Right? What are their pain points? Like, kind of understand, like, who are you here to serve? And then I think that's a first, like, a good start point.
So when you're doing this, don't think about the problem that the investor is having. Don't think about the problem that you're having. Think about the problem that the investors are having, and then come up with solutions that you can do to solve for them.
Okay.
Okay.
Next question.
So
We're gonna come to.
so Newsom says, I'm having trouble getting financing for less than 20% or 15% down. How are you guys getting around that large? Yeah, like right now, prior to COVID, 80% LTC. So again, there's two typical finance partners that comes to any large multifamily deals. First one, the big one, is the lender. Lender can be, now it's harder. Lender can be like an actual bank, can be regional banks, like large banks, or can be like private equity that actually finances these deals, or any other financial institutions. It can be life insurance. It can be even like pension funds. But those people also have lowered the amount that they're willing to lend on a deal. So right now it's probably like 55% LTC, which is loan to cost. So easy math, 10 million. Right now they're lending about 5.5 million. So you have to raise the rest.
So how do you get around large
You
down
really
payments?
There's some ways, but I don't want to recommend it, so I'm not going to talk about it. I think it's like a very combustible, but I think the easiest way is accept that you have to have a higher pool of money that you have to raise. Figure out how to raise the money. It's going to be easier.
Another tips that I would like to give to everyone is, a lot of time it's not really how as well as who, right?
Mm.
So like, if you don't know, or you don't have access to investors, or you don't have large pool of money, you just have to go find a who is willing and loving to partner with you, right? You have to
Because it's finding the deal, finding the money,
Like, you
and it's not necessarily the same person.
Yes, and we want to develop that, right? Instead of raising money from just like 10, 20, 100 people,
Yeah.
you just find one person who have access to that kind of fund.
Okay.
Okay, next question. How many hours do you work a week on one property? This is not really fundraising question, but we will answer it.
Less
Here's
than
the
an
thing.
hour. But
here's the thing.
But it's not like, if we're not working on it, doesn't mean that our team is not working on it.
Here's the thing. Like, apartment investing is a lifestyle business. There's a reason why we got into this industry. It's not because we want a second job. We actually want to get back our time, freedom, our financial freedom, and also lifestyle freedom. So we have developed a system, and also like, establish a team who is and loving to work on our behalf while we're living our life.
Yeah.
Right? Like, for us, we always say that our number one job is actually to live our life. And our second job is actually like doing apartment. And it's not because we don't care about it. It's because we have system and we have team who actually love doing what they do. And they just consistently producing result. And all we have to do is just manage them, right? So we're at the level where we have mastered that art, where we working less, but still, like, making more.
Basically, like, how it works is like the team does their working. We have teams for every single property, and they work on it every single day. We track their performance. So how it works is, like, as asset managers of these properties, we come up with a cohesive budget and business plan for every single year. And we go over with our team very, very thoroughly, so they understand exactly where we're coming from. And from there, we track their performance on a weekly, monthly, and quarter and annual basis. So if there's any trigger, any key points that looks like it's dropping or trending in a negative direction, that's something that we raise immediately, and we circle and we're like, hey, how do we solve for this? What's happening? What's the cause?
And I
So
think, and,
that's what we do on a whole. So if everything is basically green, then you just let it go, right? They're doing well, so you don't have to.
and I think the reason we also can afford to have a more lifestyle is because we choose to buy certain asset class that kind of allow us.
That affords us. So basically, we buy A class apartments because
What is A class?
A class are things that are built like 2000 in the 2000s, mid 2000s, and newer in high income area. The reason we do this is because those type of properties have very low delinquency, have lower issues with evictions, and thus we are able to pay the top performing people to manage these properties, to take care of our assets, right? So that's what we do.
Yes. Whew. Sorry for answering that so long.
Okay.
Okay, next question.
Mm-hmm.
I'm like, there's so many.
Hello, Blaine.
Hi, Blaine. Okay, next question. Have you experienced many untrustworthy brokers?
Not many, but there's been some.
Yes, and as you guys know, commercial real estate broker kind of rule the world. But the type of asset that we buy, we work with
They've been
really
good.
very like reputable. Yeah.
Yeah.
Is there more
No.
questions? I'm like, there's so many. Like, okay. Oh, next one. Okay, I'm curious about the different ways people fund their real estate investment. Can you tell me what the usual sources are? Well, we kind of touched on that a little bit.
So for your investor side, typically they'll fund from either their business or personal account. They'll fund from their retirement account. So typically it's like a self-directed IRA, or they may fund from their trust, or they may fund from like even life insurance. A lot of people do like whole life and then they'll borrow against it so that they can fund these investments. So those
Always
are
consult your professionals.
so those are some of the typical way that they fund. So on our side, how we fund our deals is basically, like we said, like typically there's two sources of funds. The first one will be the lender, who will be the largest silent partner, and sometimes like overlord depending on the scenario. And then like the second is our investors, who a lot of time are repeat investors. Like the guys, like when you track investors, the cool thing is like the two KPI that you should track is how often they invest and how much do they invest each time. So these are the two things that will really show the health of your investor list. If you have a big list but no one's ever really invested, or they've only invested once and that one and done, you've already built that relationship. This should be a lifelong relationship. If you treat them well,
If you do what you promise,
Yeah.
right? If you keep your promise and you create that trust. And I want to touch on the largest partner, which is the lender, right?
Yeah.
Last year when we purchased a $68 million property, right? It was during the time of that crazy interest rate hike.
Yeah.
And then our partner, which is the lender, they literally like they usually do like $1 billion, right? Like
Per month.
But they like around July they cut it into like $300 million, and they were like,
They're fun. So basically their lending cap per month typically was like $1 billion. But
last year
last
July,
year, because all the interest rate, that was the time when interest rates started going up, right?
so in July they literally dropped the cap down to $300 million, and they literally said, due to our relationship with you, we have done 5 deals with you already, and we like this asset class. We will give you the money. They have already said no to like family office who had like $60 million sitting in their bank account, and they're like,
For a property in Jackson.
right? And they're like, I'm not going to work with them. We have a relationship. We've done 5 deals. We're really transparent and it's really easy to work with. We're gonna go with you guys.
Actually, that brings up a really good point. So that's an A-class property. During economic downturns, banks are still lending money. However, they're more selective of what type of properties they lend to. So C-class, even till right now, C-class are like 60s, 70s, or 60s or older build in like workforce housing. Think of the tenants are people who typically earn minimum wage, work retail jobs, stuff like that. Those are like very, very, very difficult today to get loans on. But they trust A class, even some Bs, but mostly A class properties. That's where it's at.
And I know you guys may be thinking, I'm new. I don't have access to all these money. I can't like I don't think I can like do A class. Well, here's the thing. If you learn the skill set, which is like one of them is capital raising.
Yep.
You will be invited into any deals that you want.
Yep.
Like honestly, like a great deal. Like you can just pick and choose, right?
Yep.
Like I want to be in this deal. I want to do this. I want to do this asset class. I want to be in this city. Like if you learn that this one skill set, you have
It's so powerful.
Endless opportunities.
Yeah.
And you can be invited into like, like a team.
Okay.
Next question. Ooh.
Let's mark it so that we remember, and then next time we'll come back.
Okay.
Mark it.
How is getting money together for a real estate project different from funding other kinds of investment?
I think in general, if you're using a syndication model, it doesn't matter what asset it is. It's pretty much exactly the same thing. We're under the SEC Security Exchange Commission, and so there's rules around how to raise money. Specifically, the way we raise money, we do Reg D 506B. 506B means that you have to have a pre-existing relationship with the person that you're going to raise money from before you go out and actually solicit or like tell them about the deal. For instance, if we met, let's say Cash Money Banks, let's say we've met
Hi, Cash Money.
Let's say we've met 3 times. We talked specifically about what you're doing.
We went for a coffee.
We talked on the phone. We went on Zoom, and we document this. And this is where your Excel, your Google spreadsheet, or your CRM comes into play. Every time you talk to Cash Money Banks, you write it down. Hey, we spoke this day and give us synopsis of what you spoke about. This is very important because if either one of this happened to us. So
not to us, to someone who we know.
So on a not to us, but to someone we know. So on a property, no, it was our property. So our partner. So what happened was, he sent an email out to a whole bunch of people, 506B, so people on his list, and he got back an email and say, why are you sending me an email? We don't have a pre-existing really indignant, like
that's
very
what I'm saying.
Angry.
It's not us.
It wasn't us, but it was our partners. And then our partner was like, excuse me, we spoke 5 times. The first time was this date. This was a topic. This is what we talked about. Because if they ever go to the SEC because they're just manic, you can always have proof. Like, no, they don't know what they're talking about. I can have documented proof of these existing call log. Like, it's very, very important. Take that super serious. It's like a lot of work to try to go back and write it out later, but it's super simple. Just be very diligent. Like, get off the phone. If you have a CRM, pop that person's name up. There's a note section, type the date. Spoke to this person, discuss how to transfer investment, whatever it is. So once you have that, and that's how you keep your list very sanitized. So you have a list of prospect investors, right? That's general people you've met, you may have spoken to, but then you have another list of, hey, these are the people I can send out when I actually have an offer, especially if you do 506B. People know Grant Cardone does he does Reg A, slightly different, but basically he can do public solicitation, meaning he can do ads and stuff like that. But he's Grant Cardone. He spent millions of dollars per month for like 15 years so that we all know him as a household name. You spending money today that no one knows who you are, with no following, no track record specific in this business, it's going to be super hard for you to gain any traction. So to start, I recommend do 506B.
Okay, next question. Ooh, so many. Okay. Do you start with friends and family when capital raising, or should I mainly go to meetups, etc.?
Okay, now tell the story that you just told me.
Wait, which one?
The mom story.
Oh, okay. I have a great friend who, she's really savvy, and her mom is super savvy, right? Like, her mom does many investment, and she was just talking to her mom, like, hey, mom, I'm getting started in multifamily apartment, and, blah, blah, blah. Like, this is my, story. She didn't even ask, she didn't even ask her mom for money. Her mom said, I don't have money.
Basically, what happened is her friend was very excited to get into multifamily and was just sharing the story, and just as something to talk about, not even expecting to raise money from her mom.
But her mom already said, I don't have money.
Immediately, the mom was like, I don't have money. Don't talk to me about this. And it's like, that happens so often with family and friends because you don't have that track record with them in this new field. So you know how it goes. Like, a lot of times, like, you can say the right thing, but they already have, like, families have these weird barriers and doubts. So families probably, unless you have a very understanding family.
Well, I guess it's based on you, right? Like, their identity of you. If you're someone who have been investing, doing like XYZ, and they have seen that you're getting result, there may be like, hey, I'm curious.
But not at the beginning.
No, they may be like, I'm curious what you're doing. Tell me more, right? You may have that sphere of influence. versus some other parents were like have never seen them do any real estate, have never seen them do any investment, have never grow their wealth. It's kind of hard to go and ask your family or friends. Like for us, we didn't have rich parents, we didn't have like wealthy friend. Now we do, right? Like for us, it was
We
just
started.
just helping our client, our investor solving their problem, right? Like that's our main, like our biggest thing. So for us, it's like you don't have to be in this game. You need to go beyond your sphere of influence
Oh, yeah.
anyway, right?
It's not
if
enough.
if you want to just raise 1 million, yes, you can raise from your circle. But if you want to be like top, like capital raiser like us, you have to go beyond your circle of wealthy connection. You have to be able to raise capital from people who want to invest in this asset class.
Also, the thing with that is, we've seen it many times. You have friends and family who are willing to invest with you, but then they're tapped. You go to them, you go to that one well five times.
Or like they've done it like, you know, 1 time, 2 time, but like their third deal,
Yeah,
you're
they're
like
tapped.
they're like, I'm tapped, I don't have money. I gave you all my savings.
That's it. I'm done. So if you want to, and you have the type of people, go for it. But at the same time, like game plan day one, you need to go way beyond that. So
And that's
you cannot
why
rely just on that.
it really goes back to, you know, like learning skill set that, you know, will help me moving the needle.
Yeah.
Okay, next question. Oh my god, it's like running out of time. Okay, so in real estate, what part do banks play? Are they the main source of fund? We kind of touched on this
Kind of
already.
touch on that. I think we don't have.
So we know that.
Yeah.
There are.
They
like,
are the biggest.
So the type of deals we do is actually not was
just PEs.
not PEs is not collateral.
Oh, the non-discourse deals. Okay, so in lending, there's two types of deals: discourse.
I'm just like, what is that?
Recourse.
Recourse. Yeah, I'm like, what is that called?
Recourse deal and non-recourse deals. So recourse deals are basically it's collateralized with it's like you personally guarantee it. When we borrow money, it's the property is the collateral. So it's non-recourse. Worst thing happens, the lender takes the building, right? But a lot of time they'll work it out with you. So so we've already answered the previous question, but here's a little more tidbits on the recourse part.
Yes, and the type of deal that we do is not it can't be a recourse loan. It's just
we choose to make it not a recourse.
Okay, I'm like number 5. No. Okay, next question. How critical is a well thought out business plan when you're trying to get funding for a real estate purchase?
So everyone usually thinks that people invest because of logic. So they're slammed their deck with tons of like numbers and like I'm gonna show you like every single formula, all these different numbers because like I want to show you that this is gonna be a killer deal. But when people look at that, they get overwhelmed, and when people are confused, they don't invest. Yes, there's gonna be so how we work through this is like you have to know that anyone who does anything is because they want to, right? It's not based on some like rationale. The rationale comes after they try to use it to justify. So they invest anything with emotion, and then they justify it with logic. And so you do need to have that because it needs to be a sound business plan, but don't overwhelm your investment deck with tons of stuff because it'll be very long and people are not going to go through it. They're going to look through it and they're like, I don't understand what this is, and I'm not going to even look through it.
Yes. So here's the thing, like you want to say what is really important,
the relevant things,
right? And then you just want to leave out a lot of stuff because when you start saying too much, you start losing people. It's like when you go to a store, like 99-cent store, you get confused what to buy. Everything sounds like looks so good. It's like I know I haven't been there forever, but like you don't know what to buy. Everything's like seems really reasonable price, like 99 cents. But like you kind of get lost into it. So just say what is important, and what will like for us, because we're also passive investors, so we know exactly what to say because we're also always like looking to invest, and we want to know like what like we know what we want to hear. We know like these are the important points. If you help answer these questions, our money is to you.
Yeah.
Right.
Okay.
So,
let me see this one. So Walter asks, are your investors primarily investing in existing deals in your current portfolio or only new deals? So the way we do it is we raise one deal at a time. We don't do right now we don't have funds. So basically they're individual investments. I have this property. If you guys like it, you invest in it. And so we don't raise money for properties that we already own. We only raise money for new deals. So right now, the unique thing that we've done is at the start, we started buying existing buildings, right? So we started with 76 units in Phoenix, and we bought 100. Then it went to like, I don't remember now. It went to like 200 something.
I'm losing track.
200, maybe 75, 300.
You guys know.
You guys know. 290.
So it's our. I'm like
Anyway, 200
so
plus.
last year we closed, just for you guys who are new to here. Last year we closed at $77 million, which is a 295 units Class A.
Okay.
In prominent area of Northwest Arkansas.
Okay.
And then currently,
so like right now, we're not just buying new building. We're not just buying buildings. We're actually building them. So so in that case, they're investing so that we can actually do a townhome development, 118 of them. Okay.
So yes, so for us, they
invest in new deals.
Yeah, because we don't go, like, after we close the deal, we don't go back and raise money for it. That's not how we work, and I'm not sure. Like, you should be able, like, before you close the deal, if you don't have all the capital, you shouldn't be buying a deal, because if you can't raise in that certain period of time, you're going to be in trouble.
Okay. Lawrence asks, do you think the trend for investors will be to go to more BTR? Oh, wow. How do you know?
You know exactly what it is.
Okay. Hi, Lawrence.
So here's the thing.
Actually, it is the trend. A lot of, there was a Wall Street Journal article maybe a week or two ago. You guys can go look at it. Basically, right now, apartments has a certain lifestyle. Who here has lived in an apartment? Let us know. I know we're running, like, we
love it so much. We're going to continue.
But basically, like, apartment gives a certain feel. But BTR typically are single family dwelling, could be townhome or like actual single family homes. And that gives you a different vibe. And so right now, a lot of investors, they can't find single family home communities to buy to rent. And so they're building it, which is called BTR, build to rent. And so that's what we're doing. I believe that the trend is going to be more and more BTR.
And here's the thing. It takes a different skill set to be able to do build to rent or ground up development, right? And a lot of people here, you're already in an apartment, but you don't have that skill set to be able to take dirt and turn it into buildings, like millions of dollars. So more and more, like, it's actually the trend that you should be, because like, when you buy like a piece of land, it's way cheaper than buying an existing building that is already income producing. So for us, we feel that because we have this special knowledge, we're able to provide like a unique opportunity for our investors so that they can make, a lot of money, All
right, we're not talking like, we don't want to get into the BTR one too much. Okay.
Yes.
But yes.
But the trend, yes.
Yes, the trend is yes.
Okay, next question is, okay. Next question is, what kind of risk should I be aware of before putting my money into real estate? Ooh, are you talking about apartments? Are you talking about what?
In any investments, there's going to be risk and reward profile. All we have to say is invest in things that have a asymmetric risk and reward profile, meaning that the upside needs to be really, really high while the downside will exist, but it needs to be lower. What does that mean? It means that, hey, what is the chance of them losing this building based on their business plan, based on the current economics of the property? What does that look like? And that is a part of like the thing that investors need to pay attention to, because like we can make anything look pretty on a investor deck. Does it make sense? Is it something that can actually happen? Some business plans are so complicated. It's like, this has to happen, this has to happen. Like there's 5 jumps before you can get to the point where like, oh, okay, it'll work.
I think like part of our success is that we've been able to easily explain precisely what is the business plan for our properties. Mm-hmm. So that they don't have to question or guess, like, or even think like, oh, can they actually achieve that? Because that's why we chose to do a newer asset class, because people know like, okay, this is under rent. This building that we're buying is under rent, and this is what we're gonna do to push up the rent. And they understood that, and they're like, okay, when you make it really easy for the investor to understand, like it's easy for them to trust
to invest with you,
to see that your visions, and then they would invest with you.
So people, it's very simple. People think through this like, hey, does what they say make logical sense? Yeah. And that's why it's so easy to get people to invest in real estate, because people understand it's rent. Real estate is such a simple business. Increase income, reduce expense, make sure the property cash flows, and everyone's happy, right? And so it's like, hey, yeah,
For us,
so if you go tell your investor, guys, right now the property is renting, I'm making this up, okay, like $700 right now. Every average rent in this apartment that we're buying, $700. But every other property within the 1 mile or 2 mile or 5 mile radius, similar class, is renting for $900 per month. Exactly same amenities, same year built, almost exactly the same. Everything is pretty identical. They can surmise that, hey, logical if we also raise rents. And this isn't theory. This actually happens to us a lot. And one of the scenario happened on our very first property. When we bought the property, the owner had held it for like 19 years, and he never raised rents. And so therefore we were substantially under market, not because of low demand, but because he just artificially decided, I want to keep it. I'm happy. I'm making money. I'm going to keep it at this rate. And so if we explain that story to you, that, hey, this is the reason why rents are so low, not because of demand, but because he just chose to keep it that way, wouldn't you guys see that like a simple business plan of we're going to raise rents to market? That's achievable, right? That's something simple like that.
Yes. Okay. So next question is, how are the returns to invest in BTR versus
we're not going to talk about
buying Class A? Like we're not here to pitch BTR.
Yeah, so we're not.
Class
Yeah,
A. You guys.
It could be the same. It could be different.
Yeah, you guys will know that each deal is special and each deal is just really unique. So when we have investment opportunity webinars, our investor,
if anyone is interested in figuring and it's joining our investor list, we go through the same process that we're telling you guys. We have to have a pre-existing relationship, etc. Always feel free, on our bio there should be
or like anywhere
link to our website.
You know how to find us.
There's gonna be somewhere that says invest now. There's like many places that have that button. DM us, message us or something, and we'll schedule a call and then we'll connect.
Yes, because each investment is just unique.
Yeah.
Like the snowflake. Next question. Is a BTR development like investing in a startup versus buying a mature business?
Yeah, so kinda. So basically, like,
wow.
when
I can tell this question is from an intelligent person.
Yeah, it's sort of like that, because when you're building, basically it's all about cost basis. So when you're buying raw land, imagine like there's nothing on it. Of course, we're gonna spend money to build the buildings, but the cost basis is substantially lower than if we had to go out and buy it because someone else needs to make a profit. Build like 15 acres can be a couple $1 million raw, right? Without entitlement, without engineering, without like permits from the city. But every single stage that we build, the value increases. You can see my bar like that, right? So every single step in the process, the value increases. And the beauty of being in something like when you're doing a new development is that you are able to realize values that you otherwise would have given to someone else. So yes, it's sort of like that. And right now, based on the amount of interest in BTR is starting to get going, it's sort of like a startup phase of the real estate asset.
But here's the thing. Startup, there's a lot of gambling. But when you do BTR, like build to rent, in real estate, which is a hard asset, you're not really gambling, right? You're not like, oh, I don't know if this is going to work or not. We actually work with team, like property management team, which is our like biggest partner, like really important partner, to actually curate it, like what type of properties are we doing and what
so sorry that we're talking a lot about BTR. I guess Lauren says we need a BTR session, maybe.
Oh.
Okay. So small IPO asks, will you consider setting a Reg A platform? Not right now. And here's the reason why. For us, we feel very comfortable when we raise money from people who, and don't take this the wrong way, okay? So we don't plan on losing anyone's money, but we want to raise money from people who can afford to lose if should it happen. We always tell people, they ask us, hey, what is the maximum loss that you can have on a property? And we always tell them, you can actually lose all your money. Is it possible? Yes. Is it probable? No, but we always tell them that that's possible. When you do Reg A, the dollar amount that each person can invest in your deal becomes substantially smaller. Not going to name, but there's a person that does Reg A, and maybe it was a maybe it was not a like his fault, but someone did like a class action lawsuit against him based on that, claiming that he promoted something that wasn't. I don't know the truth
And
to that, but if you raise money from people who need that money for rent, or like who may not have the financial wherewithal to know or understand exactly what they're getting into, you open yourself up to like more issues later.
And for us, like our issue is not having enough money for the deal. It's more of not having enough deals for the money, right?
Yeah.
So so that's why it's again important to learn how to do these stuff, so that when you have a deal, you just have investor line up because they want to invest with you. Like they want you to help them make a lot of money, right? Like we're known for the people who make investor millions of dollars. So they're like, when you have a deal, I just want to give you the money.
And people who, you'll be surprised, like, so we first started with, so minimum wise, when we do our investments, we started with $50,000 minimum to invest in our deals.
Because that was the standard.
That was the standard at the time. We decided a couple of deals ago, like, hey, let's do 75 because you'll have less investors. And then now we actually are talking amongst ourselves, like maybe we'll raise that to 100 and maybe even higher. And the reason for that is we take our relationship with our investors very seriously. We know exactly, we know them, they know us personally, and we don't want to ever grow to the point where we have so many that we can't keep that kind of relationship as much as we can. And so therefore, you have to, if you're, think about this, okay? You raise $10 million and each person does $250,000. That's like 50 people. But if you had to do that with
Reg A,
and it was like $1,000, you know how many people you have? Think about, okay, in going into the weeds, but like K1s, tax filing, more investor, more stuff, more paperwork, all that stuff. So of the story, try to have the least amount of investors possible for any deal.
And here's the thing, like for people, like for a strong team, you actually can see that they have more money than deals, right? And then they just work with a handful of investors and just keep doing it deal after deal.
We know like a good friend of ours had like 300 something people literally on his investor list, and he raised hundreds of millions of dollars.
A lot.
Just from like maybe even more than that, like 400 or 500. Like I think in 2023 was like, I think he raised like when I text him, I think he said like we were at like 750 million or something.
And we're like, oh,
well, good for you.
Good for you. Yes.
We have a little bit more than that, but not that much more.
But here's the thing: he started somewhere, right? He didn't start with a lot of connections and wealthy people either. But he again craft that skill set.
How long have you been on? Oh my god.
Okay, next question. We're gonna go this really fast.
We'll try to do like maybe 2 more max, and we'll come back again.
Okay. What is your exit strategy for your BTR projects? Do you normally just refinance to return your investor capital, but keep the property longer? There's multiple, like to answer really simply, there's multiple exit strategies, and that's why we love build to rent, because we're giving our investor, I know a lot of you guys invest with us in BTR here too, so you know the exit strategy. Okay, next. Will you form a joint venture with a developer who has an excellent debt, but excellent deal, but not enough capital for entitlements?
We're always open to that. It just depends on the scenario, what's happening. If we're already doing another deal. So sometimes we have a lot of people approach us, but sometimes like we're not available, because how we do things is we only raise money for one deal at a time. If we haven't finished our raise or we're in the middle of raising, we're not going to do another deal.
But for us, I like a lot of you guys know, we work with we work with people who we know, like, and trust, and a lot of them are just our investor or our key principal, because we already developed that trust. Like they trust us and we trust them.
And we know their underwriting. We understand like, hey, we'll definitely do deep dive into the analysis of the purchase, or development or anything like that. But to even have that conversation, we need to have a relationship first. And that goes with any single thing, like investors, partners, vendors. You have to start building that relationship. Do not do shotgun weddings. Like in multifamily, that is really bad. Like whatever happens badly in divorces in the real world, it also happens in apartments. So Don't do
Yes,
that.
but we love joint venture, and we value team, right? Like we know that like we can only grow when we have
Strong team.
a strong team. So, but then again, like our criteria is we actually have to know, like, and trust you. And for a lot of people who are already investing in our deals, like we know that you already trust us, and we just getting to know you and also starting trusting you too. So, oh, thank you, Rob. You both are awesome.
Nan had to read that out loud, even though it's not a question. Thank you.
You know what? We love having like this live
Wow.
call.
Hey, 1 hour.
Oh my god! Like it's been.
Thank you so much for joining. So, let's run it down. We're gonna do this regularly. Are we doing this?
We don't know.
We don't.
So here's the thing, guys.
Okay,
So this is a 2024, and we want to push ourselves, even our like to grow, right? Like for us, like learning and growing is always like is our mindset,
Never ending.
right? And for us to be able to come here and for you to come and join us, we feel like this is where we want to go.
So here's a couple things. We will always be announcing when we go, maybe like a week before.
I don't
know. So basically, we'll announce before. We always will have a form that people can drop in questions, because
there's a lot of questions that we
didn't get to today.
So make sure to fill out the form.
Yeah.
So that we can try to, answer, because we always answer from like however we got them, right?
So we'll try to answer as many questions as we can, and then we'll go from there. So right now, we were aiming for Q&A based on capital raising, investors, and bringing more investors and stuff. Seems like there's a lot of questions about other topics, and we may go into that. And if you guys have topics you want us to specific talk about, just send in a message.
You know us.
There's ways and means to contact us. Just
yes, and for those of you guys who haven't been on our investor list, or who love for us to grow your money, just find us.
And message us. How about that? Message us. Let's not just try to find willy-nilly. I think in the bio there's links to things, but at the same time you can always just message us.
Yes.
And then the other thing is, yeah. So if you have anything else?
Yeah, so stay tuned for next week when we come up live. We have some exciting news for you guys.
TBD. TBD. All right.
Yeah.
We'll leave it at that. That's called the biggest open loop ever. But it's exciting, and we will share with you guys later. Thank you so much for tuning in and joining us for the entire hour. Hopefully you guys got some value. We got value by answering these questions. It helps us have to think through what it means, how to explain it. So it's not just one way. We're not just out here. It's not just for your benefit, but we also benefit from being able to come out here and answer these questions. So thank you for allowing us that space. Thank you so much.
Namaste. Ciao.